Good evening, everyone. Welcome to our third, I believe, webinar with Larlyn. Thank you for joining us this evening. My name is Jillian Holmes. I am the Manager of Marketing and Communication at Larlyn Property Management. After years of hosting live seminars for boards of directors, Larlyn is pleased to expand their learning opportunities with our online client training sessions in the form of a webinar. Due to the size of our audience, you'll be muted. If you have any questions, please type them in the area in the question box where it says type message here, and we'll address as many questions as possible toward the end of the presentation if they haven't already been answered. If we're unable to get to your question before our time is up, questions are being recorded and we'll be able to reach out to you personally to follow up. Our topic this evening is Condo Insurance 101. And I am very pleased to introduce our speaker, Wendy Wildeman from Rogers Insurance. I lost my place. She's been in the insurance industry for over 40 years and with Larlyn for 15. She helped pioneer our VIP Larlyn Advantage program, which has offered superior service and savings to our clients for more than 10 years. We're often asked by our Ontario clients why we work with an insurance broker from Alberta, and the answer is simple in the words of our president, Larry Holmes, and that's because she's the best. I'm thrilled to have her join us today. Wendy will be referring to a series of slides. You can follow along. She shares her screen, and I think that it's time to get started. So I'm going to turn the presentation over to Wendy. Give me a sec here. And you'll see her screen in just a second. There we go. Okay, your turn, Wendy.
Thank you. Thanks to everybody for taking time out of your busy days to become a better board member. Going through these seminars, as Jillian said, we've been doing them. I've been coming to Ontario for the past 10 or 12 years and putting on seminars and inviting people into groups. I think this is a fabulous way to reach people because you can do this at your own leisure and in the comfort of your own home. So the one thing that we do lack when we do a webinar is any interaction. I can't read your face to make sure that you're actually understanding what I'm talking about. So I will try and speak clearly and slowly. And if you do have any questions, please do not hesitate to type them and we'll go over them as Jillian talked about. So our first in this series is Condo Insurance 101. What we're going to do is we're going to go through basic terminology. We're going to talk about standard unit bylaws. We're going to talk about what your responsibilities are as board members, some of the changes that have come about by way of the Act, and then some interesting facts about appraisals and that type of thing. The next in the series we'll save as a teaser at the end of it, but we'll slowly go through the progression of insurance and hopefully demystify it for you. So if you refer to your screen, we're going to talk about what condo insurance is and what your responsibilities are. So we have a little bit of our own lingo. When we talk to groups and whatever, we want to make sure that you understand what our verbiage is all about. So who's the insured? That's you as the owner. That's the corporation, the collective of the unit owners that make up the condo corporation. And typically it will be, 3 to 5 numbers and then 3 to 4 digits behind. So if you are an LCC or a HCC, a WCC, and then the numbers 1, 2, 3, 4, 5, 6, whatever your corporation is. That's how we refer to you as a group. Your insurer isn't Rogers Insurance. It's the insurance company who underwrites and will pay your losses in the event that you do have a claim. In the case of the Larlyn VIP program, the lead insurer on that is Aviva Canada. They are an A-rated company, meaning that they're there to look after, they're financially solvent to be there in case of catastrophic losses. They're a long-standing insurer and a very good partner for Rogers Insurance to partner with in placing insurance. Property manager is obviously those that are assigned by Larlyn Property Management to assist you in operating your corporation. So you rely on them to help you with your day-to-day dealings, your board meetings, your AGMs. They're also the resource that I use if I have questions with respect to the Act. There's a wealth of information throughout the Larlyn family right across Canada. If you have a claim, we will assign an adjuster. Typically, this is an independent firm. They typically are not employed by the insurance company, but we have what we call a control adjuster through Crawford and Company across Canada that will be there to assist you with the claim. They'll collect the information and present the claim to the insurance company for consideration as to, you know, what is and isn't covered by insurance. The adjuster will also help you with contractors that will come in and perform emergency repairs and rebuild within the scope of the, as it has been approved by the insurance company. And last and not least, I hope, is the broker, which is me. We are typically, the best way to describe what we do is we are a middleman. We have clients such as Larlyn who represent you as boards. They come to us and say, this is what we need. We work with them designing a program, and then we take it out to the insurance companies and market it in such a way that they're fighting for your business. So we liaise between the two, clients and insurance companies, to make sure that they have the best product for the best dollar. We're not always going to be the cheapest, but we are going to give you options as to what kind of coverages or deductible levels, that type of thing. We also serve as resource right through the year. It's not just, we don't just step in at the placement of the policy. We make sure that we're there to answer questions that the property managers might have. We also invite anybody who is insured through Larlyn and through our office to give us a call and ask their insurance questions directly to us. It's a service that we provide for Larlyn. So with over 300 corporations across Canada and the Larlyn family, you got to understand we're pretty busy. Again, with terminology, we have to follow the Condo Act. Every province has its own individual act. There's a lot of similarities, but they have to be followed in that particular province. So we have to know that act for each province that we have, and plus I have to be licensed as a broker to deal in those provinces. The Condo Act reigns supreme. If you decide in your bylaws or your declarations to do something that violates the Act, it becomes a moot point. The Act would trump any bylaw or declaration. The bylaws and declarations are basically, they're again similar, but they are individual to each corporation. So if you were a corporation that was built by the same developer as the one next door, you might have similar bylaws. It's not unusual to have as many different sets of bylaws or declarations as there are corporations, depending on how the group as a collective chooses to operate their corporation. It could be something like a dog bylaw. We're not going to have dogs in our corporation that weigh more than 30 pounds. It could be no parking on the street bylaw, whatever it is that is intrinsic to your particular corporation. A few years back, and I think 2001, Ontario government changed the Condo Act, to which I hope the rest of Canada adopts, and they came out with the standard unit bylaw and the deductible bylaw. And this was specifically done to demystify the process when we're talking about an insurance claim and what is the corporation's responsibility to hold insured and what is the unit owner's responsibility. In particular, where this has been beneficial, if you're in an older building and you've done a lot of improvements and betterments, and maybe you're the third or fourth owner since that improvement and betterment has been made, and you have no way of knowing that that has actually occurred, you could actually have a shortfall with respect to how you're insured. This really helps set it out, and like I said, I applaud the Ontario government for making this, and I hope it goes right across Canada. We're going to delve into that a little bit more in more detail later on in the presentation, along with the deductible bylaw. this deductible bylaw puts a little bit of the skin in the game for the unit owner in the event that they are a party to it by act or omission in causing a loss to the corporation. The corporation will also have their set of rules and regulations, and basically their code of conduct. We're not going to make noise after 10 o'clock at night, you know, that type of thing. So it's, you know, you can't have a laundry line, you can't throw your lingerie over the balcony to dry in the sun, that type of thing. So you want to follow your code of conduct. So as an order of what has precedence, act reigns supreme, then you have your bylaws, then you have your code of conduct, or how we're going to play in the sandbox. So what should a new standard insurance policy look like for a condo corporation? This definition is right out of the insurance policy. We talk about the building itself and it being the actual structure. Whatever is what we call affixed to and forming part of, that's the building. They will have some extensions under there, like if you have materials for, let's say you have a swimming pool and you have chemicals to keep the pool clean and filters and other various bits and pieces that aren't actually attached to the building, but they are there to maintain and run the building. You might have a lawnmower or a snowblower or something along those lines. That would still be classed as part of the building itself. The little picture on the side is my favorite analogy, and it's where you get a real clear understanding. Typically, if you're able to turn your unit upside down, what stays put is the condo corporation's property to insure. What falls out is you as a unit owner or your tenant, it's their property to insure. The only caveat to that would be in respect to how you've written your standard unit bylaw and whether you're going to include improvements and betterments. And again, I'll make that a bit clearer later on because, again, it's very important legislation. Then you have the contents of the corporation. The contents may be lobby furniture, might be gym equipment. You might have an amenities building that has, you know, a table and chairs and pool table or something like that. So that, again, is property of the corporation. No individual unit owner owns that property, but as a group, you own it collectively. If you're in a high-rise or your building is air-conditioned or you have elevators, that type of thing, we used to call it boiler and machinery insurance, but what it's called is equipment breakdown. And basically, this broadens up the wording as far as what we call a peril. A peril being fire, wind, lightning, flood, earthquake. That's a peril. But the peril of mechanical breakdown isn't included in a standard policy. So if you do have any of those items that are subject to mechanical failure, then you need an equipment breakdown policy. If you're in a townhouse, similar to a single-family dwelling, we wouldn't buy equipment breakdown coverage because your furnace might, you know, have an issue or whatever, but it's generally below a deductible and really isn't subject to the definition of mechanical breakdown. Excuse me. Commercial general liability, what that covers is if someone comes onto the property and falls and is injured, they can sue the corporation because possibly, you know, the landscaping company didn't properly shovel the sidewalk or de-ice it or put down any sand, gravel, or salt to melt it. In this situation, this is the one time where, as an owner, if someone slips and falls, they might choose to sue the corporation. Now, how can you sue yourself? When we talk about the law and the acts, the Occupiers Liability Act steps in and says, well, the assumption there is that the corporation needs to protect the individual, and if that person is injured through someone's negligence, then they have the ability to sue based on occupiers liability. The other form of coverage under the general liability is called property damage. Now, if someone is hurt, obviously that's bodily injury, but if through some fault of the corporation, there's property damage to someone else's property, then you would have coverage under the general liability section. An example of this would be if a garage door fails. Now, I have a little bit of a personal bias when it comes to this because I probably get 10 of these a year, and I probably only ever pay maybe one every 2 years because I've done this myself. I've run the garage door. And guess what? The garage door hit my car. Whose fault is that? That was my own fault. The door didn't fail. I just failed to swipe my card to go into the garage. So that kind of a situation, there's no negligence or culpability. The door didn't actually fail. It was my blonde moment that caused the damage to my car. A lot of people will put that back onto the corporation and try and get their car repaired as a negligent claim against the corporation. We recently had some videotape of a garage door failing, and in fact the door did fail. So that type of claim we would pay under the general liability, not the blonde moments. The other one that should be near and dear to your heart as a director or officer is that you want to have directors and officers liability. So if you inadvertently make a mistake and it causes someone financial loss, and we'll go into that a bit more into the presentation, the coverage that's going to defend you and indemnify you, and that means if there is a judgment, the insurance policy will pay for that judgment as well as your defense costs. That's the directors and officers liability. It's fairly inexpensive, and there's a couple of little bells and whistles that are intrinsic only to the Larlyn program that are important, and we'll discuss again through the balance of the presentation. So we now talked about corporations insurance. Now we're going to talk about the unit owner. So again, we've got our little picture up here about the house being upside down. Again, if you can turn the unit upside down, what falls out is the unit owner's responsibility to insure. So that means the fridge and stove, the washer dryer, we know that would fall out. Even though you bought it with the unit, it's not corporation's property. It's always going to be your property. So you need to make sure that you, when you purchase your own insurance, that you keep all those items in mind. The personal property would also include any units and betterments as defined in your standard unit bylaw. There's also loss assessment coverage, so in case there's a shortfall in the condo corporation's insurance, they may assess the corporation as a group, and you may have to pay. There's limits of that under your personal insurance. There's also additional extensions under there, obviously additional living expenses. So should there be a fire and you're forced to live elsewhere, you still got to pay your mortgage, you still got to pay your condo fees, but now you don't have a home while the building is being repaired or rebuilt. Your personal insurance policy will give you, and it's different by percentages, and you need to speak to your insurance professional, but it will give you so much, like I think it's sometimes 10 or 20% of whatever your contents limit is. They will give you that in addition to go and live elsewhere while your unit's being refurbished. It also has personal liability, premises liability, and employer's liability. Those things are personal liability. That kind of goes with you wherever you go. And again, I always try to use real-life examples, and I generally try to tell these examples from my point of view, simply because, you know, fiction is more believable than the truth, actually, sometimes. I accidentally set fire to a carpet when we were in one of the suites at the Saddle Dome watching a Flames game, and I did it with sparklers. My personal liability paid for that carpet because I did damage to somebody's third-party property. It wasn't my property because, remember, it's liability, and my insurance company paid for my blonde moment or my negligence in burning that carpet. Premises liability, you have to understand the corporation is not responsible for anything that happens inside your unit. So if someone comes in and you've stretched a cord across the hallway and they're inside your unit and they trip on that cord because you wanted the Christmas tree to be in a different corner this year, and they fall and they hurt themselves, that's your liability. That's not corporation. If they've fallen in the hallway, that's corporation's liability. And I'm saying like in a high-rise where you have a common element hallway, that's corporation. If it's in your hallway inside the threshold of your door, that's your liability. It also has a bit of employer's liability in that. And what that means is when you get people to come onto the property to do work in your unit, so let's say you needed to have the dishwasher replaced or something like that, make sure that they have liability, but also make sure that they have your WSIB. You have to have your workers' comp coverage in place. Simply because if they are injured on your premises, they can sue you if they don't have workers' comp. So whenever anybody comes to my house to do work, I ask that, are you insured and do you pay into workers' comp? Once they answer yes, then that protects me from them coming after me should they get hurt on my premises. So corporation has written right into the Act and into the declaration that they shall obtain and maintain insurance on behalf of all the unit owners for a list of perils. And remember, we talked about perils being fire, flood, earthquake, wind damage, lightning, vandalism, all of that. And to determine the amount of recovery, it has to be on the full replacement cost of the building. Now, you got to make sure that unless you are a contractor or an insurance appraiser, you really as a board shouldn't be setting that value. The property manager, I won't let them set the value, and I certainly am not going to set the value. If you've come into the Larlyn family and you've brought your current certificate of insurance, we're going to use that as our starting point. But we're going to really recommend that you have a current insurance appraisal because you have to be insured to value. And again, we'll talk a little bit about that going farther into the presentation. But these are two things that are mandatory by the Act. Obtain and maintain the insurance for the perils that we need, and also make sure you've got enough insurance. So fiduciary responsibilities, this is where you as board members need to know what by law is expected of you and where you need to make sure that you don't cross the line and do something that doesn't follow along with that fiduciary responsibility. So you need to make sure that you are acting in good faith. You're not doing any fraudulent or dishonest, criminal or malicious acts or acting in a deliberate or intentional way. Because if you do any of that and you are sued, your insurance is not going to respond to you. The insurance is for that you, for lack of a better word, sort of blindly bungle into. You believe that you were doing something to the best of your ability. However, it turns out that you didn't do it appropriately. You've caused someone a financial loss. They can sue you. And they can sue you personally. The Act states that a corporation must insure anybody sitting on a board and indemnify them, and the way that they do this is buying directors and officers liability. The other thing is you need to make sure that you look after the insurance you choose to perform the upgrades to the building that are necessary. You're following your reserve fund. And I'll give you an example of an actual claim that happened in Alberta whereby it was mostly an investor building where the unit owners did not reside there. They had it tenanted, and the majority of them sat on the board. And they made decisions for the rest of that corporation based on their own sort of, I would almost go to the word greedy, but it was for their financial gain. So they drove the poor property manager. This wasn't a Larlyn property. They drove her absolutely insane and said, get a quote for the sloping balconies because they're sloping in a negative slope towards the building and it's causing the joists on the decks to rot. We need to do something with that. Get another quote for the fences. She would present them. Typically, quotes are only good for 30 days. They would table it till the next meeting or the next meeting, and then the quote would be stale dated. She'd have to go out again. All the while, they're collecting and putting all this money in the reserve fund, but they're not properly maintaining and looking after the property. Well, lo and behold, someone on the third floor decides to put their unit up for sale. She has the realtor's coming back with the potential buyer. They're looking a second time, and they've told her, we're going to make an offer on your property. Well, as she gets to the door to go upstairs into the building, one of the balconies actually falls right off the building. You can understand that the sale collapsed and the board was sued, and rightfully so, because they failed in their fiduciary responsibility to follow the reserve fund and to govern themselves within their role to make sure that they were replacing and following the maintenance schedule of the reserve fund. You also want to make sure that you are there to conduct yourself in such a way that it's for the good of the whole. You can't have your own hidden agenda. You can't be there because you're trying to push something through and get something changed that is your own agenda. Make sure that you're looking at it. You're like the head of the household. You need to make decisions for your family that benefit the family as a whole. One of the other things that's actually not on the slide is if you've got a conflict, you need to declare that. So let's just say your corporation is looking to replace the flooring, and you're a flooring contractor and you want to put in a bid. What you need to do in that respect is you need to excuse yourself, and I mean literally excuse yourself from the room, and you need to declare your conflict. It needs to be minuted. They can make the choice for the flooring contractor to, and you may get it, you may not get it, but you have to make sure that you are not acting in conflict. Again, acting for the good of the whole, not just for your own self-agenda. Okay, my favorite piece of legislation when it comes to condos, the standard unit bylaw. So basically what this does is it very clearly states what is and isn't the responsibility of the corporation to hold insured, especially when it comes to improvements. You can Google standard unit bylaw for Ontario. You'll get a couple of Toronto standard condo corporations that actually post them right on their website, which is awesome. And it'll say, should you have a loss, here's what you will get back. So it'll talk about the casing style on the door, what kind of hardware will be there, the weight of the carpet, what the floor finishing is in the bathroom. They might even go to say standard or Delta taps. It makes the process so much more simple for an adjuster to go in. It's been in legislation for quite some time. It's been enacted, and those losses whereby we have had serious damage to the interior, you've got the personal adjuster and you've got the corporation adjuster. They can work together, and quite often you can have the same adjuster to adjust both losses and say, oh, that's the condo corporation's responsibility. Granite countertop, that belongs to the unit owner. So the cost of the upgrade should be included in your personal insurance, and it makes it very, very clear. One of the things the standard unit bylaw does not do is it does not alter the allocation of maintenance. Please don't confuse who's responsible for repairing and maintaining an item with insuring an item. And let me give you an example of that. So if there's a built-in dishwasher, because remember that dishwasher is not going to fall out when we turn our unit upside down. It stays put, and it's more than likely outlined that the dishwasher is insured by the corporation. If it breaks or it malfunctions or it needs a motor replaced, that's repair and maintenance. That's your responsibility always as the unit owner. If your property burns to the ground, the insurance is going to give you back your dishwasher. So again, be clear, it doesn't change the responsibility when it comes to maintaining it. It says it does actually, except with regard to improvements to any unit, it will alter the way the allocation to repair after damage responsibility between the corporation and the unit owner. Okay. The other piece of this same legislation was the deductible bylaw. So the Act in 2001, prior to that, stated that we could only assess the deductible to a unit owner for the damage to their unit. Okay, so let's say that Jillian and I live in the same complex, and she lives upstairs, and she fell asleep while the bathtub was running, and she overflowed it. Well, she doesn't have a whole lot of damage in her unit because water takes the path of least resistance, and I'm in the lower unit below her, and all this water now ends up in my unit. I've got drywall damage, I've got flooring damage, I've got all kinds of damage. Prior to the change of 2001 Condominium Act, we could only assess Jillian with the level of the deductible for the damage in her unit. I might have $10,000 worth of damage, but she might only have $1,000. Then that would be the amount. So the amount of the damage to her unit or the deductible, whichever is the less. So it left us it left people kind of exposed, and these corporations were having to keep these deductibles when it was someone's act or omission. The new bylaw changed that and says that now, and typically you have to look at how yours is worded. It will say if there was an act or omission, you get the whole deductible. And that to me is the best way to put it, because now you've got unit owners that have some skin in the game. They're going to be a little bit more cautious because they're going to have to pay that $5,000 or $10,000 deductible. Now don't run in fear. If you've got personal insurance, check with your broker and find out what level they will pay up to a certain amount, whether it be 10, 15, 25. Some will even pay upwards to $100,000 if the corporation assesses you with the deductible. So what constitutes a standard unit? This is kind of your typical sort of framework when it comes to a standard unit bylaw. You still need to maintain and repair all of the improvements. However, you also need to look at, when you're writing your bylaws, if you don't already have them done, you need to stipulate exactly the type, the construction, the electrical, the flooring, whatever that is, whatever the corporation is going to agree that is there to insure. And it would be for the replacement of all materials, maybe of a similar or better quality than that's actually there. But again, you've got to make sure that you stipulate it, okay? Some of them go a little far. And while I have not been involved with a loss with one of these, I do see that there could potentially be a problem. I do get it why the corporations want to do this, but they have defined the common elements to actually, in some cases, they would remove all floor coverings, or they would remove all countertops whatsoever. And basically where this was born out of is you had corporations that were kind of fed up. They didn't want to pay for somebody having a grease fire, pulling it off the stove and dropping it on the flooring or the carpet, and they get their whole brand new carpet in their unit. They got kind of fed up with that. They didn't want these claims to show up on their insurance policy because they wanted to protect the insurance policy. So what they decided to do is we're going to take all floor coverings and all cabinetry and countertops and that out. Okay, be careful what you wish for, because now if there's a loss and somebody doesn't have personal insurance, and a scary statistic I'll throw out there is probably 40% of unit owners purchase insurance. So if you're in a building of 100 units and you've excluded all flooring and all cabinets, and only 40% of you have personal insurance, there's going to be 60% in that building that are going to have a financial hardship because they need to now put carpeting and flooring into their own unit and their countertops and their cabinetry out of their own pocket. So again, some of them swing too far. However, if that's what the board has come up with, and the corporation as a whole has met quorum, because they have to have a certain quorum, and it's been approved and passed, that's the way it is. Now, this legislation's been out since 2001. I'm hoping that the listening audience tonight, I'm hoping every single one of you saying, yeah, we're covered, we've got that standard unit bylaw in place, we're looked after. There's actually a court ruling whereby they said, we've given you since 2001 to do this. If you have a loss and there is improvements and betterments that are involved, and you haven't passed your standard unit bylaw, corporation, you're now on the hook for everything. So you got to be careful, because Again, let's go back to Jillian and I being neighbors. If she's decked out her unit, put in $100,000 worth of upgrades, and I'm a simple person and I don't require much and I've not done anything to mine, you're actually going to have a shortfall in your insurance should you have a total loss, because the board might not know about those improvements and betterments, but now the court is saying we've given you the ability to define what your standard unit is, and if you don't do it, you're on the hook anyway. Again, trying to protect the buying public. But I know all of you have your standard unit bylaws, so this is all old news. I'll carry on. So, like I said early on, we do invite anybody who is a condominium unit owner or tenant board member to give us a phone call when they have questions. These are my Letterman top 10 questions. I don't think there's 10, we shortened it, but who pays the deductibles? So again, the bylaws, if part of a standard unit bylaw, dictate how it will be assessed. And in most cases, your personal insurance will pick up that deductible. So you're insuring your deductible, but you're buying it down to a reasonable level. How are volunteers protected? So if you have a committee that decides they're going to go plant flowers in the flower beds in the spring, or they want to, maybe you've got a retired person who would like to change the light bulbs or vacuum the hallways or whatever, the corporation can purchase through the Larlyn VIP program a very reasonable insurance product called Volunteer Accident. Because you're a volunteer, you're not covered by a workers' compensation scheme, but we would give you some sort of benefit if you got injured as a volunteer. There is a caveat to this. It has to be for a board-sanctioned event or act. So let me give you an example. Again, we're going to put a committee together and we're going to plant flowers, or we're going to change light bulbs, or we're going to, I don't know, prune some trees. The board has to know about it and approve it. I don't want you having somebody who is a plumber to go and do some plumbing, and he's going to do it for free. We want to make sure that we've got somebody who's got liability in case he messes up. I had two older gentlemen here in Alberta. They were both in their 80s. One was a mechanical engineer in his day, and the two of them climbed up on a ladder and decided to replace the spring in an overhead garage door. Not board sanctioned. That stuff can kill you. We would hope and we would encourage you would get an insured professional to do that. We don't want anybody killed or injured in an event that is really outside of what the true definition of a volunteer for these innocuous items are. What is directors and officers liability? And again, this is another acronym. What is D&O? That's what it is. D&O insurance stands for director and officers. And basically, it will protect you as a past, present, or future board member for claims that could be brought against the board for wrongful acts that arises from your actions as a board member. We will not pay for intentional acts. We will not cover you if you knowingly and wittingly do this. It's basically where you stumble into it in an unwitting manner. The other thing is if you've taken someone else's advice, so you phoned a lawyer or you phoned an insurance professional and they've given you wrong advice and you've acted on that, we will still indemnify you because you did seek an outside source, and even if that information was wrong, you didn't willingly, it wasn't your fault. So we're going to make sure that we protect you. As a director and officer of any corporation, I don't care if it's your condo board, your kids' hockey committee, or it's major shares in a privately held company or a public company, directors and officers' personal assets are exposed. So you can be sued as Tom, Dick, and Harry in your own personal name. This policy is mandatory under every act in every province and is part of every insurance policy. So don't be afraid. You are protected. Defense costs are included. We have policies that start at $2 million, $5 million, $10 million, depending on the size of the corporation. And that's generally something that we discuss with the property manager as well as the board, that to what level you should purchase your liability insurance. It's under the liability, the the directors and officers liability, that we have coverage for human rights. So in the province of Ontario, the tribunal there is very liberal in assisting individuals who think that their human rights have been violated. So we've seen a few claims come out of Ontario. Most policies will cover specifically the defense costs, and you're limited to $100,000 or $200,000. Only the Larlyn policy will cover a judgment. So an example of that, and this came from Ontario, there was a lady that became, she got arthritis, and she couldn't turn a traditional round doorknob. So she went to the board and said she wanted all of the hardware in the common area to be replaced with the lever hardware. Well, the board didn't really treat her very nicely, and as she claimed, and this is how it went, and basically said, we're not going to do that, go away. She went to the Human Rights Tribunal and said that her human rights had been violated based on her disability. And we got involved. It was replaced. A special assessment went through to all of the corporation, and the human rights action went away. How should a unit owner go about purchasing personal insurance? I strongly say you should take in specific your standard unit bylaw along when you're going to go talk to your personal broker. The reason for that is they now can see exactly what the corporation is going to insure, and they'll ask you, okay, you're not going to get countertops and cupboards, as that one example earlier on showed. We need to add into your policy coverage for those improvements and betterments. How much do you want to buy? And they'll walk you through that. Not my fault. Why must I get my personal insurance involved? So back to Jillian falling asleep and leaving the bathtub to run, and she's done damage to my unit and as well as the own. The bylaws will state that the unit owner is responsible, that it has caused the loss by way of an act or omission. Maybe your verbiage, and it's different on all of them. It may be if the water emanated from your unit. They're all different, so you need to know them. You will be involved in getting your personal insurance to pay that deductible. Also, if my personal contents had been damaged by Jillian falling asleep and leaving the tub running, I would have to go to my own insurance. The corporation is not going to look after my personal contents at any turn. This is my favorite line. Unit owners need to change their way of thinking. It's not neighbor against neighbor. When you are in a corporation, you are owners, you are like a member of a family. So remember that you're all in this together. Okay, so let's switch gears a little bit. Earlier I talked about one of the responsibilities in the Act is that you have to insure to value. How do you figure out what it's costing you to insure your property? You need to go to a bona fide insurance appraiser. This isn't a bank appraiser. This isn't a market value. It's not even what's off of your tax assessment. What this is an insurance professional that will go out and look at your building, similar to your reserve fund, but we're not looking at the age. We're going to look at what it would cost to replace this building in its exact format at today's real present value of dollars. Now, like I said, we might inherit an insurance certificate with a limit of $2 million on a, let's say we're an 8-unit complex. Well, typically other insurers will put in, 3 to 5% inflation. But if you don't know that that number is correct, you're only 3 to 5% more or less wrong. So one of the things that we do under the Larlyn program is we give you guaranteed replacement cost. And basically, I think what we need to do is the proof is in the pudding. I'm going to show you on the next slide how valuable guaranteed replacement cost is. How do you get it? What does it cost? We'll talk about that. But you need an insurance appraisal, and you need to be insured to value, to whatever that insurance appraisal is. This was a 20-unit, 3-story walk-up apartment complex in Slave Lake, Alberta. We had the wildfires go through in 2011. The appraised value on this particular property was $2 million, almost $2.8 million. That's what we had for the face value of the policy, because this property had guaranteed replacement costs, and they did insure to that value. Well, because the whole area was so massively destroyed in the fire, the cost to repair all of this was exaggerated to the nth degree. Now, what's great about this picture is you have to understand just how hot these fires were. This is exactly how we found the building after it was cooled off and we could go into Slave Lake. There were cars in this parkade. What you're actually seeing is the bottom floor of the parkade of the building. And if you notice, there's nothing there. It completely incinerated. I thought you'd at least see maybe a refrigerator or a toilet or something. No, the only thing that withstood the fire was the brick, and that was all crumbled, as you can see in the foreground there. It was the most amazing thing. However, this 20-unit apartment block took 2 years to rebuild, which it should have taken, maybe 6-8 months, a year max. And the actual cost to rebuild it was $5.6 million. Had this property not had guaranteed replacement costs, the difference in that shortfall of almost $3 million would have fallen to the unit owners as a special assessment. And that would have been pretty ugly, because all of a sudden now to rebuild your building, you got to pay for it twice. And that would have been very sad. So this is a really good visual of why guaranteed replacement cost is so valuable. Okay, so replacement means repairing, reconstructing, whichever is the least, to the same type and quality. If you choose to upgrade, then that's up to you. But insurance is supposed to put you back. The number one rule of insurance is to put you back into the position you were prior to having the loss. And number two rule is you shouldn't profit from a loss. So if you decide that you want to, and I'll give you another real-life example. We got hit with hail in Alberta in August. As we speak, I've got siding people at my house removing vinyl siding, and they're putting on hardy board. I'm paying for the upgrade because my insurance claim was to replace vinyl with vinyl. I don't want to go through another siding replacement, so I'm paying the difference to upgrade to hardy, so I won't be damaged by hail ever again, because I don't want to do this again. I'm doing this once and I'm done. So again, that's my cost for that upgrade. So under the program for VIP, the guaranteed replacement cost says you need to have a current insurance appraisal within the last 36 months, and you need to insure to that. So don't just keep the appraisal in the drawer. You need to make sure that it gets to your property manager, who in turn gets it to us. We act very promptly with appraisals. The day we get them is the day we increase the value, because we never know what's going to happen tomorrow. Who knew that Slave Lake was going to catch fire in May and totally eradicate the town? We make sure that once we are aware of that appraisal, we increase your value. This is probably the most important message that I can give to you, because it's the number one problem with any insurance claim, not being insured to value. And the last thing that we will ever want to do is tell you that you're going to have a special assessment because there wasn't enough limits to rebuild your building. That's not a good thing. We want to make sure, and it's inexpensive. Insurance, I know, is one of your biggest costs on your budget. However, if you look at the dollars in and the dollars out, we've had some crazy increases with rates in the last while because North America has been hit with so many occurrences. We had floods, you had floods. You've got these freezing temperatures now where we're seeing, a lot of freezing pipes that are coming out of the Ontario area, where people are leaving windows open, pipes are freezing, then we get water damage. I won't rub it in that it's 18 degrees here in Calgary today, and has been for probably a week. But we've had our fair share of bad winters, and it's basically been an insurance nightmare. And if it's not frozen pipes, it's somebody slipping and falling. If it's not that, it's hailstorms, windstorms, ice storms, it's been a tough go for insurers in the last few years. So we want to make sure that you're insured to value. We want to make sure that your insurance policy does perform the way it should, and that's part of the Larlyn Advantage with the VIP program. So I will turn it over to Jillian, and she will then go through the questions, and I'll help you with any questions you might have.
Great, thank you, Wendy. There hasn't been too many questions yet, but I will go through the ones that we have. Please type away if you have some more. If you can figure out how to raise your hand, I can unmute you as well. I've got the organizer control panel, so I can't remember exactly where your little button is to raise your hand. But our first question is, the floor and hallway squeaks when you walk on it. It's the original floor. Is it the owner's responsibility or the corporation's responsibility to fix it?
Okay, so inside the suite, is that what it said? You kind of blanked out there, I'm sorry.
Oh, sorry. It wasn't clarified if it was inside or not, just that the floor in the hallway squeaks when you walk on.
Okay. Okay, so the flooring that is in the common element, so let's say that this is and I'm going to guess, it's a apartment style, and you have hallways and then doors that divide the unit. The carpet in the hallway is common element and should be addressed by the reserve fund for replacement. The carpet that is inside your unit is, remember we talked about repair and replacement. That is your, repair and maintenance. That is your carpet to maintain. Now, insurance doesn't cover wear and tear for anything. So let's just say your carpet is 25 years old and it needs to be replaced. That's at your cost as a unit owner. Now, if there was a claim and it had to be a fire, a flood, whatever, that is the corporation's, as long as it's defined in the standard unit, that is the corporation's property to insure, and the insurance would replace it up to the standard unit quality. I hope I've covered that. If not, type some more and we'll go over it again.
Thanks, Wendy. A couple of you had hands raised, but they're down now. If you wanted to click before I go to the next school. No? Okay. Can the corporation require that a unit owner maintain an insurance policy on their unit and provide proof of this insurance?
You know, the corporation can ask for it. I remember when I rented my first unit, I couldn't get my keys until I showed them that I had my tenant's package policy. So that was the owner putting that premise on me. The corporation's there because you're talking about owners. You can't force them to have it. It's always a good idea. But let's say you have an unscrupulous owner and they go out and buy the insurance policy and don't pay for it and it gets canceled for non-payment. It would be a nightmare to try and administer that and make sure that everybody's insurance was up to snuff. You can make strong suggestions. I know that Larlyn sends out letters and it says, you know, here's your insurance certificate, or sends an email, here's your current certificate. We're going through the VIP renewal process right now. It's really good for you to have your own personal insurance and review it. And it's in every talk we give, we talk about people having their insurance. It's not mandatory like car insurance. It's very advisable, but I think it actually breaches outside of the board's responsibility to play big brother and make sure unit owners have their insurance.
Makes sense, thanks. I've got a hand raised, so just 1 second to see if I can make this work. There you are. I'm going to unmute you, Sam. Just a second, please. Okay, go ahead. Sam?
Yes. Okay, sorry. Are you there?
Yes, we are.
Can you hear me?
We can.
Okay, my question is, I did not understand the deductible bylaws, especially when you mentioned the unit 901, the water overflow to unit 801. Whose responsibility is to repair 801 and whose responsibility to repair 901?
Okay. Does your corporation have a standard unit bylaw with a deductible bylaw?
Yeah, yeah, I saw that, but okay.
Do they have it?
How can I go back there?
Oh no, not on the screen. No, but I mean, Sam, your particular corporation, have you passed the deductible bylaw?
I think so.
Okay.
As far as I know, yes.
Okay, so let's work on the premise that you have one, and it says if you as a unit owner have been had a loss in your unit and it's damaged another unit,
Yes.
and it's because of an act or omission, the corporation can assess you as the unit owner with the amount of the deductible, but no more.
Deductible of the corporation or deductible of the unit owner?
The deductible of the corporation.
Let's suppose the corporation deductible is $5,000.
Okay, which typically they are for water damage. And if you fell asleep and left the bathtub running, or did your own plumbing, or something along those lines, or just properly didn't do any proper maintenance and repair work, and water damaged your unit and the unit below, that is corporation's responsibility for insurance. The deductible can be assessed to you based on the verbiage of your bylaw.
Okay, I got you. Thank you.
You're welcome.
Thanks.
Our next question is it the responsibility of the unit owner to obtain the appraisal, or is it the responsibility of the corporation?
Absolutely the corporation, because they're going to insure the entire building. We're not trying to insure one unit at a time.
Super. The next one is, we have 18 townhouse units in groups of 3 with a large gap between units. Unless someone were to drop a bomb on the property, it would be virtually impossible for fire to damage all units. Is it still necessary to insure all units?
Absolutely. Basically, that's what the Act actually says. It says that you have to insure the entire corporation for its full replacement. Now, I don't wish Slave Lake to happen on anybody. I don't wish another flood to happen on anybody. But those are the perils that you least expect, but they're the ones that are going to come up and bite you. And regardless of the fact that they are spread apart, the fire does travel, and you could potentially lose it all. Now, the rating takes into consideration that likelihood of that, whether that's going to happen. And the rating that is the how we charge out the insurance premium takes into where you are, what your building is made of, the separation between buildings, and we negotiate the rates with that accordingly. So there is a break in it that you may not ever use that full amount, but we charge you on an appropriate level or basis.
The next one, our board just passed the standard unit bylaw recommended by our property manager, but the language is very general, builder's grade, etc., and does not itemize individual finishes. Should we correct this and spell these out more specifically?
Without actually, looking at the bylaws, I'm assuming that it wasn't really the property manager that did that, because most of them have gone through a lawyer. If they've been passed and ratified and you still don't like them, then you have to go and redo them all over again. So there is a cost associated with that. If in fact you've had a loss and it becomes an issue and they don't hold up the way or work the way that you think, then maybe that's the time you would want to rewrite them. But there is a typical builder's grade. If you go into Home Depot, they'll say that's a builder's grade of drywall or studs or insulation. There is a certain classification that's builder's grade. Us as lay people may not know what that is, but it is language that is normal to the construction industry. So while they may not look like they're detailed enough, and I mean I've seen some really detailed ones which are amazing, I just don't know if the cost associated with redoing them and getting them passed again weighs the risk of them not being as detailed as they should be. If you want to email them to me, I can review them and give you my opinion, because at the end of the presentation, my email address is there, and I have absolutely no problems having a look at them.
Great, thank you very much. I think we've answered this one. Is it the responsibility of the unit owner to get an appraisal to ensure they get full replacement insurance? I think the appraisal is for the building, not for the contents, correct?
Correct.
Okay, so it is the corporation's responsibility to get the appraisal. Awesome.
Yeah.
If a corporation has not insisted on homeowners registering improvements on title, i.e. decks, etc., is the corporation insurance responsible for damage to said improvements?
Okay, I have to go right back to your standard unit bylaw. It should be very clear in there what is the corporation's responsibility to the unit owner when it comes to insurance. Now, if I've added a deck on, my corporation is never going to have to be responsible to repair and maintain it on its normal wear and tear. That'll never be their responsibility, whether it's registered or not. However, depending on how the standard unit bylaw is worded, it may actually fall under that standard unit. Doubtful, but again, how it's been worded is how the insurance is going to respond. Because remember, my policy is going to cover all of that, but the very first thing that's going to go in one hand is the policy, and the other is going to be the standard unit bylaw and the declaration. So we know exactly what is the corporation's responsibility to insure. You can add or take away whatever you want to do. It's up to you completely. Much like that one example where they've removed the floor coverings and they've removed the countertops from the insurance responsibility for the corporation. Your standard unit bylaw may say within the footprint of the building, we're not going to look after any, and which nor would I expect it to, hot tubs or decks or whatever. However, your corporation might want to include them. Again, standard unit bylaw is going to define the responsibility for insurance to the corporation very clearly.
Here's a good one. Our building tried to pass a standard unit bylaw twice, with the owners refusing to pass it. What can we do?
Well, we've had some fairly tenacious property managers that will actually get the board to go and talk to their neighbors. I'm going to tell you it's very tough when people don't understand, because they think you're taking something away from them. So I'm not going to change where I am because I may be losing something. I think the thing that you need to make clear to these people that turn it down because of it's and I use the word in ignorance because they don't understand, you should point out the legislation whereby the courts have ruled, if you don't define the standard unit, we're going to make you responsible for all improvements and betterments, regardless of whether you have knowledge of them or not. Well, all of a sudden that creates a huge shortfall in your insurance limits, and if you had an insurance claim, we're going to have a big problem, because if we're to include all of these improvements and betterments, then a claim that could possibly be something simple as wet drywall and a bit of flooring may turn into, oh, well, they had cork floors, or they had that made their maple counters or cabinets all swell, and now we have to rip out all the cabinets. It turns that loss into a huge claim instead of something that would be fairly minimal.
Great advice. And so you guys are aware, this session is being recorded and will be posted on our website later tonight, actually. And I will also include a PDF version of the slides. So it would be a great resource to be able to share with those unit owners that are giving you trouble. Even that one big slide that says, if you don't have a standard unit bylaw, bill's on everybody. So that'll be a great resource to share with those unit owners. Next question, is it possible to get the slides? So yes, they'll be on our website later tonight. Our corporation does not have a standard unit bylaw in place. How is a water damage from a flood originating from the radiator, corporation responsibility, assessed? We had water go down 4 floors. How should this be properly handled?
Okay, the insurance policy is going to look after water damage caused by a sudden and accidental release of water. If the radiator has been leaking over a long period of time and that's what's caused the damage, the peril is then deemed to be seepage and leakage. The insurance policy does not cover seepage and leakage. However, the property that's been damaged does belong to the corporation, and I would suggest that possibly there might be some culpability back to the corporation. We have to find out why and what's caused this to cause the damage. If it was sudden and accidental, we're not going to pay for repairing the radiator because that's repair and maintenance, not an insurance item. But we will pay for the water damage to the actual structure as long as it falls within the standard. Well, you don't have a standard unit bylaw, sorry. It falls into the definition of the building or the unit. So the flooring and drywall are damaged, then it would be replaced by the insurance policy subject to the deductible.
Okay, there is a tree, healthy, next to a driveway. During strong wind, a branch falls on a tenant's car. Should the corporation pay for any damage to the car?
Well, we've had this actually happen. So I think the whole thing of the matter is they can't, if the tree had a broken limb and it was posing a danger and somebody failed to act, then I would probably, as the car insurance carrier, I would probably go back to the corporation and say, we told you that this tree had a broken limb and now it's come down and damaged my car. We're going to look to you for the recovery of the damage to the car. However, Mother Nature does some crazy things, and that tree may not have any issues at all, and we know that tree's been there. We parked beside that tree. It's you're culpable. You're culpable of that liability. I would say no. There's no. You have to have a negligent act to trigger the general liability policy. Should that reasonable person at law cut that tree down because there was a slight chance that it might, drop a limb or something and damage something? I don't think, if the tree isn't already damaged, I really don't believe that you can build a case that the car should be repaired by the corporation. It's no different than if I follow a truck down the highway and it throws a rock and breaks my windshield. That's kind of an assumed situation, living where we live, and they put gravel on the roads. Again, I couldn't go back to that truck and say, you drove recklessly and picked up a rock and broke my windshield. That's not his negligence. That's just bad luck.
How about if an owner left a window open and a rad pipe section froze? Should the corporation pay for that damage?
Okay, again, we're going to go back to whose property is damaged and how was it damaged. So we would pull out the standard unit bylaw. We'd find out that this unit hasn't been improved and everything that was damaged in the unit is defined under the standard unit bylaw. And if I had a nickel for every time I've paid one of these claims, I could be retired. This is one of the most common claims that we get, especially in Alberta with the swings in the temperatures that we get. The sudden and accidental release of water is a covered peril under the insurance policy. The insurance would respond. First, they wouldn't respond to repairing the pipe. That would be the corporation's responsibility. Most often that is the least expensive portion of the loss. Sucking up the water, making sure that we don't have mold, removing the drywall or the flooring, that's all part of the insurance claim and is subject to the deductible. Now, if you've got a deductible bylaw attached to your standard unit bylaw, then that person that left the window open could and should be assessed with that deductible under the policy.
Alrighty, that wraps up the questions. I don't see any hands raised, so I am going to flip the presentation back over to me and do a little bit of a close. Hang on. I'm still with Wendy. Up, here we go. Sorry guys, bear with me. Okay, sorry about that. So, coming soon. Judging from the questions, you guys are going to love part 2. Basic claims, excluded perils, actual claim examples, and how to be prepared. It's got your names written all over it. That is scheduled for Thursday, April 9th, and the registration links are up on our website. The invitations have been sent to our property managers, so you should be getting those shortly. And I'll also be sending our little MailChimp invites very soon as well. So you'll have lots of opportunities to get the registration link and join us for that. And then in May, date to be determined, we'll finish up the series with how to manage your risk and mitigate losses, talking about prevention, importance of contracts for transferring risks, and keeping your insurance costs low, stuff that we all want to know. So that's what's coming up soon. And like I said, this presentation is being recorded. So you'll receive an email if you've attended this with a link, but you'll also be able to find it on our website at larlyn.com. Then you click on About Client Learning, I believe it is, but you'll have the link as well. And to contact for further questions, of course, your property manager and regional managers are both valuable resources on your customer service team. And then here's Wendy's email address as well. She's a wealth of information. Very valuable resource for your questions. So additional Learn with Larlyn opportunities. If you like this evening's presentation, you can have a peek at our previous webinars, how to read your condo financial statements and condo budgeting. We also have ebooks that you can find on our website. You just type your name and your email address. You'll get a message back with a downloadable PDF of a little booklet that you can watch on your screen, print out if you want, share it. I'm also doing one on insurance that I'll combine all 3 presentations together and create an ebook together with Wendy for insurance. But we have one on the role of the board of director, the role of the property manager. I combined the 2 previous webinars into 1, 2, 3s of condo insurance financials. And there's one that's called The House as a System, and it was written by an engineer talking about the building envelope. So there's lots of chances on our website to learn more. That wraps things up. I don't see any more hands raised. I'll double check for questions. Oh, sorry. Can you go back to the last question? The unit owner caused the broken pipe. Are they not held responsible for the damage? Sorry about that.
Can you hear me still?
Yeah.
Okay, perfect. So yeah, that's what I said. The deduct, as long as you have the ability to assess the unit owner for the deductible, that's the maximum that you can charge them for as the deductible. Because remember, this is one of the costs that you're paying into, and you own that policy as an owner. So we're there to protect you. We can't just arbitrarily decide that you're going to be on the hook for all of the loss. The maximum amount that we can charge back, or I should say the corporation can charge back against the offending unit owner, is the deductible. They've paid for the insurance, and they get to have the benefit of the insurance should an unsuspected or an unintended loss happen.
Alrighty, thank you so much, Wendy. I know I've enjoyed your presentations, and hopefully our audience has as well. Check out the recordings and the slides, and I really encourage you to join us on April 9th. I know you're going to love it because of all of your questions tonight. Thanks and good night.
Good night.